Welcome everybody to today's session on fighting financial crime using SaaS. My name is Rick Schumann. I'm a Charlotte-based managing director at EY. I have more than 20 years of experience in the technology area and mostly around financial services, including financial crimes compliance with risk, fraud, investigations, and digital delivery. Before EY, I previously worked at one of the U.S. largest banks running their global technology area focused on global financial crimes compliance. And currently I'm leading the financial crime systems integration practice here at EY, including our alliance relationship with SaaS. As part of this practice, we are leading efforts both at regional and global banks to perform vendor selection, system integration, independent testing of KYC, which is Know Your Customer, transaction monitoring, and sanctions screening. Next, I would like to introduce my colleague, Andre.
Hi, thanks, Rick. So my name is Andrea Cavallero. I'm a senior manager on the UI regulatory compliance team on the technology side, based out of New York. So the major part of my career was dedicated to financial crimes prevention, mostly on the tech side, but also acting as a liaison between business and technology. So from development through optimization, always looking for ways to enhance the detection techniques, improve efficiency, and also reducing costs. So I cover basically all the financial service sectors and major geographies. I'm here today to share, along with Rick, our experience on this area using the SaaS platform. So thank you again, and let's get started, Rick.
Thanks, Andre. So let's just kind of start off with why the financial services industry cares about financial crimes. And when we talk about financial services industry, we're talking about banks, wealth and asset management, broker-dealers, insurance companies, and even money service brokers, anywhere mostly where money movement is involved. So why do they care, right? So some financial crimes affect the financial services themselves. Think about fraud and money loss, but some affect the society as a whole. They can affect the economy, national security, human rights with trafficking, and really all of this is covered through when we talk about financial crimes at our financial services organizations. Now, banks alone, if they only care about fraud and money loss, why are they really interested? And the reason is the Patriot Act. And after 9/11, the Bank Secrecy Act. The regulators mandate that financial services organizations need to keep pace with the changes of criminal activity and help them in the fight against illicit behavior. And it's an enormous problem. You know, almost $110 billion annually is estimated in terms of tax evasion. In the UK, they estimated that every 15 seconds a financial crime is committed. And in the US, it's most likely higher than that. We're talking about $2 trillion in illicit funds in circulation. And what does that mean to the banks? Well, you know, if they don't comply, then they can face large regulatory fines. There's been 12.4 billion, the 7 largest fines. That's only 7 of the largest. There's been plenty more. The average financial crime operations budget is in excess of $1 billion for the largest global banks. And they say that this is about a 70% increase since the last financial crisis around 2010. So with that said, let's go to Andre. And let's talk about what we actually mean by different types of financial crime.
So thanks for the background, Rick. Now I'd like to provide you an idea about different types of financial crimes, the detection and controls to prevent them, and the challenges faced by the institutions on implementing and operating these controls. Starting from the top on my slide, we have some examples that can be also expanded considering there are like variations for each of these items, but detect and stop any sort of crime is a priority for all of us. And some controls operate more on the real-time mode, and others depend more on information available for the detection. So here we have some good examples that can serve as a base for most of the fin crime types, and also as a reference to discuss the challenge related to the detection and the monitoring controls. So, for example, fraud, transaction screening, market abuse, and insider trading can be more on the real-time side, as while like money laundering, bribery and corruption, and tax fraud more on the post-event side. But there are also situations that can be somewhere in the middle, like electronic crimes, terrorist finance, and others. So to mention some challenges, and we'll cover in detail some of these items in the next slides, I would consider, number one, data volume, right? So it's growing fast with the new products and services popping up day after day. Digital banking and open banking can be just like a couple of examples. Another topic would be like a complexity of global banking networks, as well cross-border risks. So as a result of the global economy, considering the international presence of institutions and connections, in addition also to the dynamics of the geopolitics. So Rick will mention and cover specifics about these kind of controls in a bit. Other topic would be inefficient frameworks and processes. This can have like a significant impact on productivity and costs. And not to repeat, but the increasing regulatory requirements are also an important factor. So challenges will be always present, but technology, methodology, and techniques are here to help. So I'll hand over back to Rick so he can talk more about trade-based and money laundering. Rick, back to you.
So let's take a look on how SaaS helps in the fight against financial crime. Let's take an example around trade finance. And when we talk about trade finance, what we're talking about is the movement of goods cross-border, trade between companies, shipping, trucking, anytime that we're moving goods from one place to the other. You know, and that's ripe for financial crime because there's large dollar amounts. We're talking about $17 trillion in trade every year. And the way that the illicit behavior happens is either, you know, around money laundering. Think about moving goods that don't match the line of business, or there's an incorrect inventory of goods. Think about shipping a empty container from one location to the other. Moving goods through different geographies to hide the origin that may be a sanctioned country like North Korea. Or even fraud, when a number of excessive parties are involved, that they're trying to hide the origin of the funds, and it may be looking at incorrectly showing the goods in order to defraud someone of finances. So how does SaaS specifically help? And it's really around the analytics. Trade finance involves a number of different data sets, and SWIFT is one of the main transaction systems that we're talking about. So you see a transaction, but some of the fields within the SWIFT messages themselves are unstructured data. A lot of information about the bill of goods is included in the messaging, free text fields. We've got core KYC systems, which talks about the risk of the different entities involved. Letter of credit, this is between the exporter and importer. You think about this as a guarantee of delivery. The exporter is selling goods, the importer doesn't want to pay until they receive. Banks provide letters of credit to provide surety of delivery and payment. You have the payments themselves. You have all different types of documentation, and like I mentioned, bill of goods. What is the documents of what's in that shipment? And there's other third-party data. And this is typically done manually in terms of trade finance. If you want to look for illicit behavior, someone needs to collect all these different data points, whether they be structured or unstructured, and make a decision as to whether a suspicious activity is anticipated or viewed. So what we've done is we've partnered with SaaS. We've created an application called Track, and it's kind of used as explainable artificial intelligence. So it combines with the risk policy to come up with 206 risk and compliance checks in a way that meets regulatory standards. It is a proven methodology that the regulators like. It matches with a bank's risk governance defensibility. And really what it uses in the middle is this analytics layer provided by SaaS. There are structured business rules. There's machine learning to learn from previous decisions as to whether information is indicating a suspicion based on a risk policy. contextual analytics to look at documents and see whether, terms used in the documents indicate that, again, there's something kind of money, there's movement of goods that are either illicit, maybe related to military and defense use, but other things that might throw up red flags. And then a network analysis to connect individuals to show what is the relationship and indicate if there's rings of activity or goods are starting to become sourced by similar means that would indicate that there's, again, illicit activity happening. So with this, you're covering a lot of different areas in trade finance crime, really around money laundering. As I mentioned before, good example is shipping an empty container, but paying lots of money for that. And so the money is movement, but really there's no goods exchanged. Fraud, military dual use, economic sanctions, again, hiding the origin of the goods and looking at the network analysis to see if you can determine whether it includes a sanctioned country. Again, with boycotts, which is similar to sanctions, and is there a boycotted area that should not be allowing this trade to occur? And then meeting local export controls as well. And the outcome of this, it comes up with a transaction risk score, looking at all of the data that's coming in, using the analytics to create a score, applying it to the risk policy, and looking to make automated decisions. As you can imagine, and Andre pointed us out earlier, the amount of transaction volume happening both in the industry in terms of trade is combined with the number of increased regulations that are coming in at the local, state, and national levels, means that there's a lot of decisions that need to be made based on all of those risk areas. And the tool is really meant to expedite the process. SaaS greatly increases the productivity and the efficiency of firms, financial services organizations in their risk and compliance areas. So let's go on to another example that uses SaaS to help fight financial crime.
Thank you, Rick. So as mentioned on the previous slides, we have a bunch of challenges that were presented, from regulatory pressure to operational aspects, and also the complexity of the illicit schemas that we are always trying to detect. So, and the trade finance is a good example. Very, very, very complex, right? So, but there is one element that is always on the center that we cannot ignore, which is data, right? So I could spend the entire day talking about different aspects of data and multiple approaches and solutions, but today I'll focus on this specific slide on one approach. It's called the entity resolution. So entity resolution basically deals with duplicate entities, internal or external entities, right? So this can affect not only the detection process, but also the investigation of case and reporting results, impacting not only the efficiency, but also productivity and costs. So without solving entities, we may be losing the ability to identify potential suspect situations, and you also won't be able to provide a holistic view for the investigators that are responsible to analyze every single case that is detected by the controls and the systems. So this issue can be caused by simple data quality issues. I mean, caused by the data collection or transformation, but it can also be part of a fraudulent schema where the bad actors try to obfuscate the connections between parties and transactions. So the entity resolution approach or solution consists in a number of techniques and algorithms to identify similarities that can result into a single entity or a group of entity-related or related parties. So the steps of this process would cover not only the data standardization and enhancement, but also the matching and a variety of methods to identify connections and similarities. So direct comparisons using fuzzy logic, phonetics, and others. So the resolution of parties add not only quality to the process, but can also use to detect other type of behaviors that based on simple data or data controls are not able we are not able to identify. So as you can see, this is one of the solutions that we work with SaaS based on the SaaS platform that can help the financial institutions not only to enhance the quality and the process, but also to identify other possible suspicious activities that are not identified by traditional AML platforms, but also trends, meaning identify ahead of time where are the suspicious activities. So back to you, Rick. Okay, so how SaaS fit in this picture, right? So UI and SaaS are working together, as Rick mentioned, developing solutions or implementing the SaaS platform to deliver service to help the financial institutions, addressing not only the issues that we covered in the previous slides, but also at the end, on the end-to-end financial crimes detection and prevention process. So by one hand, we can have the SaaS platform that covers all the elements, I mean, from fraud, anti-money laundering, customer due diligence. But by the other hand, we can also use the different modules to leverage and solve specific issues. I mean, it can be used during like an implementation, optimization, or even to address specific problems like the visual analytics module, the model risk manager, and the FCA recently launched by SaaS. That, for example, can increase like activities related to data integration, the analytics itself, for example, segmentation, parameterization, scoring, and others, or also to validate existing models and identify points for improvement, for example, on a model validation approach. So this is like an overview of everything that you have and everything that we are doing. I'll hand over back to Rick for the closing notes.
Thank you, Andre. As you can see, we're using SaaS to fight financial crime, and it really is vital to provide the financial services organizations a tool and a set of tools that they can use that are both reliable, that are expedient, that are real time. So thank you for your time today. Hopefully you've been able to get a sense of what it's like in the world of financial crimes compliance and how financial services are fighting financial crime to protect our economy, to protect our national interests, protect themselves, and how SaaS is playing a big part in leading the industry. So thank you for your time today. We have our contact information shown. If you have any questions or follow-up that you'd like to do, feel free to contact Andre and myself, and thank you for your time.